Plug Power stock surged a massive 161% in the previous month as investors got excited about the company's first electrolyzer module, which was delivered for Galp Science Refinery, a huge milestone for the company. They also received the $1.7 billion government loan guarantee to support new hydrogen facilities in the United States. And of course, they got a price target increase to $7 from $3 per share, all of which is boosting shares in Plug Power stock. Of course, Plug Power is one of only a few companies I had rated as a sell for 2025, and the stock was crashing all year long before this last month and the performance increase. So investors are asking me, what do I think about the company now? Am I changing my rating? Do I still think it's a sell? So I'll answer those questions here in this video. So what investors might not know about Plug Power is that it's been around for decades. It's not a new company. It's just getting investor interest in recent years. Since 2020, I would say, when investors became more and more interested in these kinds of alternative energy stocks, and Plug Power was one of the beneficiaries, and the share price rose, and the company generated some nice revenue increases, signing deals with Amazon and Walmart, which increased the company's revenue. But those deals were not signed at attractive terms for Plug Power, and the company was losing hundreds of millions of dollars on the bottom line, as they weren't even making improvements on their profitability. They just kept losing more money the more money they were generating. So in recent years, their revenue had turned backwards, right? So from 891 million in 2023, the revenue crashed down to 629 million. The reason for that was Plug Power's management team said, look, if we just keep making these kinds of arrangements, we're just going to lose more and more money, and investors are not excited about our company anymore, so we can't go back to investors and ask for more money and get that money cheaply. Furthermore, the government was getting less and less interested in giving Plug Power any money because they noticed the company wasn't making very much progress in improving profitability, and since they're not making very much progress in improving their unit economics, they weren't going to be able to build these new facilities so that they can source production internally instead of buying a lot of the energy they needed to sell to others.
Click the link below to watch the full video.